Hey everybody, it's Bobby Nahum here with AMAC Real Estate Company. Hope everybody's having a fantastic week and is having a fantastic fall so far. We are here today to talk about the real estate market again for Leon County, and we're going to be going over the year-over-year third quarter residential real estate market metrics. We're going to be talking about how those are looking and how things are looking just overall in the real estate market here locally. We're going to cover some broader economic issues as well as some broader real estate related issues that are having an impact on our local market as well, and give some insight as to where things might be headed over the next few months. So let's go ahead and get started. So the first thing we're going to be talking about today is we're going to be talking about listings. So as everybody knows, the available amount of homes for sale that we've had here in Leon County has been very low for several years now, and that trend continues to get worse. So in the third quarter of this year, we actually saw listing inventory go down by 20% compared to a year ago. So, and that's probably going to continue to get worse even now that we've seen a huge spike in interest rates. Over the last 10, 12 years, on average, people have locked in interest rates at somewhere between 3 to 4%. And now interest rates on a 30-year mortgage are all the way up to about 7%. So you're going to see a lot of people staying put in their homes because they don't want to trade out a 3 or 4% interest rate for a 7% interest rate with a much more expensive home, because not only have interest rates gone up, but home prices have gone up a lot too. So I would expect to see listings, the available number of homes for sale, continue to go down. We're going to see that trend continue for a while. The only thing that might save that is save us from that is if we see a massive increase in construction of new homes, which we are seeing some of that, but we're not seeing it nearly at the level that we need to see it to make up for the shortfall of inventory that we have. So the next metric we're going to talk about is home sales, and this one was actually probably the biggest surprise of, and not really surprise, but it was the metric that stuck out the most. So home sales in the third quarter of this year went down by 23% compared to a year ago. That's a huge drop. That's probably the biggest drop that we've seen in a long time. We've been seeing for the last year at least, we've been seeing a drop in the number of home sales. But this is really, in the third quarter of this year, we really saw an acceleration of the decrease in home sales from previous quarters. So again, 23% drop from a year ago, and obviously this is caused by the massive increase in interest rates. So again, we're going from 6-7 months ago, we were at 3% interest rate on a 30-year fixed rate mortgage. Now we're at almost 7%. So compared to a year ago, when you factor in the increase in interest rates and also the increase in home prices, nationally, the average mortgage payment now is about $800 higher than it was a year ago. So that's a huge increase in people's housing expense from a year ago. So that's obviously pushed a lot of people out of the housing market, and people are going to continue renting or going to rent for longer than they would have otherwise, but it's just getting unaffordable for some of those lower income would-be home buyers, and it's pushing them out of the market. So as a result, we've got a big drop in home sales from a year ago. So and one thing to also note that's significant that we haven't seen so far this year is that home sales are now dropping faster than available inventory, available number of homes for sale. So what that means is that you've got the demand, home sales are dropping more than the supply number of homes for sale. So that could cause a shift in the market to where you're seeing a demand supply shift, where you're going to start to see the supply slightly go up in relation to demand, and this could have an impact on home prices. I don't think we're going to see home prices go down. We have not seen that yet. We haven't seen home prices in Tallahassee fall year over year, and we haven't actually even seen home prices go down from the peak selling months in May and June. Home prices in September and October so far are actually up compared to where they were at the peak selling point of the market back in May and June. So I don't think home prices are going to go down, but I think if we see this trend continue where the number of homes being sold is going down at a really high rate, we are going to see home price gains moderate, probably to more in the 3 to 5% range going into 2023, as opposed to where we've been the last year, 2 years in that 10 to 20% range. So that's significant. So home prices actually year over year, despite the massive decrease in home sales, home prices continued to stay strong in the third quarter. So we actually saw 12% annual home price appreciation, which is huge. Again, the historical average for home price appreciation is about 3 to 5%. So at 12%, we're well above that. Again, I would not expect to see that continue, but I still think we're going to continue to see home prices go up even into 2023. Despite it's pretty incredible, despite everything we've seen between rising interest rates, inflation, record high inflation, as well as crashing stock market, to see home prices continue to go up here in our local market is pretty impressive. But I think it's a result of a couple things. Number one, we have a strong job market here locally. We've got all the state and government jobs here. We've got the universities, Florida State University, Tallahassee Community College, FAMU, and several other universities here, smaller universities here. So that provides some stability in the job market. Plus, we've actually got an expanding private sector market here with Amazon opening up a major facility out on East Mahan, and then they're also going to be opening up another one over on the northwest part of town in the near future. And we're continuing to see businesses open up here and expand. So the job market here is stable. So that's, I think, one reason why we are seeing stability, home price stability here. And we just weren't subject to the wild upswing in demand that some of these other cities like Tampa and Jacksonville, Miami saw, where they went way up, and as a result they're coming down now a little bit. So a little bit more stability here, not as many ups and downs here. So as a result, I think we're not going to see a downward trend in prices like some of those other cities might see. So all right, so the next metric we're going to talk about is the sale price to list price ratio. Again, this measures on average what homes are selling for compared to the home's asking price. So if a home is listed at $100,000 and it sells for $95,000, that means the sale price to list price ratio is 95%. So in the third quarter of this year, the average sale price to list price ratio was down a little bit from a year ago, 0.4%, very small drop. But it still came in at 99.38%. So on average here in Leon County in the third quarter, homes were selling for 99.38% average of what the asking price was. So that's still really high, and that's still definitely indicative that we're in a seller's market. So as long as we're at that level, of sale price to list price ratio, it still means that it's a great time to sell. And even though the market has slowed down a little bit here, if you price your home right and you take the time to get your house nice, looking nice, and it shows well, you shouldn't have a problem selling your house here, for a good price still. So, but anyway, sale price to list price ratio, that's what that is. And then the next metric we're going to talk about is average days on the market. So on average, it took a home 5.6% longer to sell in the third quarter of this year than it did a year ago. This year, on average, it took a home 38 days to sell, whereas a year ago, it was only 36 days. So a little bit of an increase, but not much. Again, we've had a drop-off in home sales, which means we've had a drop-off in demand for homes. So it's not that surprising that average days on the market ticked up a little bit. The next metric we're going to look at is distressed sales, total sales ratio. This measures what the number of distressed sales are in relation to total sales. So on average, in the third quarter, distressed sales made up 1.12% of overall sales. That's slightly down from a year ago when distressed sales made up 1.59% of overall sales. And again, distress sales are usually foreclosures or short sales, but they can be really any type of sale where the nature of the sale lends itself to the property selling for below market value. So this could also be like a tax deed sale. It could be a bankruptcy sale, an estate sale, or anything like that. So distress sales right now are making up such a small percentage of overall sales that they're really not having any effect on the real estate market right now. But I still like to keep an eye on distress sales, because if we start to see an increase in distress sales, then that means that we might have some turbulence ahead in the real estate market. But right now, everything looks good with that. And that's pretty much it. So overall, just kind of want to recap and give you guys a little bit of insight on some things to look out for in the near future. So overall, the real estate market in Leon County looks to be in pretty good shape. It's compared to some of the other parts of the state. I've got people that I know in Tampa and Jacksonville that are in the real estate business there, and they're telling me that they've seen a drop in home prices and a significant drop in demand from the peak about 6 months ago when things were going crazy. And you're like in markets like Jacksonville, where you had a lot of like real estate investment trusts buying properties. Those groups are pulling back over there, which is having a significant impact on the market over there, and you're seeing price declines from a few months ago. You're not seeing that here. You're seeing much more stability here. I think I looked a few days ago in Leon County in that May-June time period. The average sale was 302, about 302 roughly, and then in the September and October, the average price had actually ticked up to 309 overall throughout the county. So we've actually seen prices go up a little bit from the peak selling months here, and we're definitely obviously up from a year ago. Like I said, 12% from a year ago. So prices continue to be strong here, which is pretty impressive. I think going into next year, like I said, we'll probably see home prices start to moderate a little bit and go back down to like that historical normal level of 3 to 5% annual price appreciation. And that's going to actually be good for the market, in my opinion, because we need the market to kind of cool off a little bit to so that it becomes more affordable for more people, because home wage gains need to catch up with home price appreciation. That's what really needs to happen to have a healthy demand for real estate, because if home prices keep going up faster than average wages, then nobody's going to be able to afford a home. So it's going to be good for the real estate market to see the prices kind of start to cool off a little bit. So the things to look out for, in my opinion, one thing we need to look out for is we need to pay attention to what happens with interest rates going forward. So obviously interest rates have gone up a lot. They're probably going to continue to go up a little bit more. I think it would probably be realistic to see the 30-year fixed rate mortgage go up to probably 7.5%. If it gets up to 8% beyond, we may be in some trouble there. That's kind of like a psychological threshold, in my opinion, to where if it gets above 8%, I think that's going to start to have a pretty significant impact on buyer demand and affordability. Hopefully it doesn't get there, but really depends on inflation, which is the next thing we need to look for. So, obviously everything going on in the economy right now with the crashing stock market and the rising interest rates, it's all based on what inflation is doing. So the higher inflation continues to be, the worse it's going to be on. It means interest rates are going to continue to go up, because the Federal Reserve is going to try to get a hold of the inflation by continuing to raise the interest rates. So, and then also, if the interest rates continue to go up, it's going to send the stock market prices down, because people are going to be concerned that the inflation's out of control, and it's going to make it harder for companies to it's going to squeeze their profits the higher inflation goes, which is going to drive stock prices down. So watch out for inflation and see what happens with that in the months ahead. And then also watch the stock market, continue to watch that. The stock market's obviously not directly tied to real estate, but there is a consumer confidence aspect. So if people are seeing the stock market go down, they're seeing their 401ks plummet, they're seeing their IRAs plummet, and all their other retirement accounts plummet, they're going to have lower consumer confidence. And when consumer confidence is lower, people are less likely to make big purchases like homes. So if the stock market's going to continue to go down, people aren't going to want to buy a house when they're seeing their retirement accounts plummet. So I would watch out for that too. But overall, everything's in here locally is going pretty good. If you're wanting to sell a house, it's still a great time. If you're wanting to buy a house right now, it's a little bit better than it was a few months ago because you don't have as many buyers to compete with. So, on good homes and good locations that are priced right, that are nice, now we're seeing maybe a couple offers, whereas 6 months ago we'd see 10 offers. So it's a better environment. Buyers have a little bit more negotiating power now than they did a few months ago. So and that's it. I hope you guys enjoyed the video today. Hope you found it helpful. Of course, if you ever have any questions, feel free to reach out by email. You can email me or text me, or you can just leave a comment on this video if you want to on YouTube, and I can also be reached on Facebook as well. And of course, if you like the information in the video here today, give me a like and also subscribe to my YouTube channel. I'd appreciate it. And hope you guys have a great rest of the year. And I will be talking to you guys after the first of the year, where we talk about the fourth quarter market report. And hope everybody has a great Thanksgiving, and hopefully everybody has a great Christmas. And I will talk to you soon. Thanks. Bye.